Good morning, traders. Welcome to today's pre-market forecast for the Emini S&P 500 futures for today, Monday, September the 14th. Our news items as we begin our week today. Let's look at it. Nothing on the docket for today or tomorrow, Tuesday. We get heavy reporting the rest of the week on Wednesday, Thursday through Friday. Particularly important and highlight is the FOMC projections and FOMC statement. There is in federal fund rate. There's no expectations that the rates are going to be changed in any way, shape at all this coming month. So we don't expect much impact. Now we do expect some impact from some of the statements coming through at 2 p.m. So keep your eyes open for that report if you're trading throughout that session. In reference to the rest of the week, we're talking about retail sales, crude inventories, and of course UOM consumer sentiment. Really important to understand where we are in reference to the markets and people's confidence in the current economy. Let's quickly jump to our analysis. Our daily chart as usual. This is our 30,000 foot view. And as we see, we find ourselves coming off the all-time highs, which was established last week or early last week. We see how the market comes off it. We see the Labor Day reversal, which was something that we kind of expected. It danced around the 200 SMA. Now we're using this resistance. So we find ourselves between the 50 SMA and the 20 SMA. Again, very familiar pattern, been here before. You just look. You look. Here's a run, big turn down. Attempt to continue. Look how the market dances between the 20 SMA, which is the orange line, and the 20 SMA until ultimately breaks through. And you see that time and time again. It's just the way markets work. Now we do have a very interesting pattern here. We have a compression triangle here. Now, obviously, who's going to win the push? The buyer's going to take the bull's going to take over the market again, or are we going to have another step down to another potential retracement here? Now, remember, when we measure a Fibonacci from this particular run here, where it all started, to the current, we're basically at around a 38% retracement. Actually, we went down a little further than that. Yeah, 38% retracement. That's where we are right now. That's a healthy retracement after such a prolonged run. I mean, we started this run way back in June. So this is a very healthy retracement for the markets. So what are we expecting today? Well, today we can't make up our minds looking at this chart. We know we're in a tight compression. We're looking for evidences in the next couple of charts to help us to understand what the general sentiment in the market is, and therefore start to generate our more immediate decisions that we need to be making in the market. So let's jump to another chart that's been very helpful to me recently. It's an 8,000 that's not the one. This is the 2300,000. I'm talking about the 8,000 tick chart. And as you can see, this is coming off the all-time highs. There's our compression. There's our slight other part here. So this is where we find ourselves right now. We find ourselves in a slight compression here. We're expecting the market to make up its mind one way or the other. We do have a gap here. And what I'm referring to is the market can churn between these two areas. That's not really making up its mind. To me, making up its mind is either breaking above this trend line or breaking below this trend line. There's going to be a lot of activity between here. There's no doubt about it. But the real activity is going to happen. The real direction of the market is obviously after it breaks compression. So that's very important. So that's where we find ourselves right now. Still, it's just still confirming our hypothesis in the general market. It's just a market in current compression finds itself between the 20 and the 80 SMA. And let's look at our analysis chart. This is the one that's closest to our trading, but without any indicators. And that's not the one I'm looking for. That's not the one at all. Here we go. This is what I'm looking for. As you see, here's where we find ourselves right now. And obviously, here's our trend line. We also have another level of compression right here. There's our level of compression. You can clearly see them both. You can see the top here. You can see how the market is coming back to the intraday high of Friday. The blue is the intraday high. The cyan is the intraday high. The magenta is the intraday low. These numbers here represent our volume profiles, our two areas of value areas, and our point of control. The market is there. Here is the gap. Now, markets tend to clean gaps up. So, again, another important thing to do is measure from the lowest point to the highest point. And again, there you see, this is the golden area here. We can expect the market potentially to retrace down to this level. And if you notice, if the market does retrace to the level of the bottom part of the gap, it's still a 61% retracement, which of course is still a healthy retracement for a run. Can the market continue higher from here? Yes. So therefore, this line here is our short-term north-south line, meaning this is where we're expecting the market to either continue to the upside or break lower. If it breaks lower, there's plenty of places that this market can retrace to. You can see plenty of previous objectively priced identified levels where the market can retrace to if it wants to go lower. But this is where the battle is going to happen. Of course, any break below yesterday's intraday high or Friday's intraday high to this level, we're looking for short, at least in the short term. The big moves are going to happen once we reach this area here. Okay, so take care. Have a great trading session. Let me know if you have any questions.